This podcast is brought to you by Empor.top, the stories of top companies. Disclaimer. This AI-generated content is for informational purposes only and should not be considered as investment advice. Roblox, building the metaverse one block at a time. Picture this, it's March 10th, 2021. Wall Street is buzzing as traders refresh their screens, watching a direct listing that would shatter records. At 1:30 p.m. Eastern, Roblox Corporation begins trading on the NYSE. The reference price? $45. The opening trade? $64.50. By day's end, this company that most adults had never heard of commanded a $45.3 billion valuation, making it the most valuable gaming company to ever go public and the largest direct listing in history, eclipsing Spotify's $26.5 billion debut. But here's the kicker. Half of all American children under 16 were already on the platform. While Meta would later spend tens of billions chasing the Metaverse, Roblox had quietly built one over 17 years, block by block, game by game, kid by kid. How did a physics sandbox experiment become a platform with 85.3 million daily active users? How did two engineers from San Mateo create what might be the most successful user-generated content platform outside of YouTube? And perhaps most intriguingly, why did it take Wall Street so long to notice? This is the story of accidental empire building, of a company that stayed stubbornly unprofitable while paying out hundreds of millions to teenage developers, of a platform that became social infrastructure for an entire generation while adults weren't watching. It's about David Baszucki's methodical march toward what he calls human co-experience, built not through acquisition or massive content deals, but through millions of kids learning to code. Today, we'll journey from a 1989 physics simulator through the lonely years of the late 2000s, examine the economics of virtual currencies before crypto made them cool, dissect the pandemic explosion that caught even Roblox off guard, and evaluate whether this $45 billion bet on the creativity of children is genius or madness. Along the way, we'll uncover how Roblox accidentally created one of the most powerful network effects in consumer technology, and why understanding their playbook matters for anyone thinking about platforms, creator economies, or the future of digital interaction.
The year is 1989. The Berlin Wall is falling, Tim Berners-Lee is proposing something called the World Wide Web. And in California, two brothers are selling educational physics software to high schools. David and Greg Baszucki had founded Knowledge Revolution to create interactive physics, a 2D simulation program that let students experiment with gravity, friction, and collision dynamics on their Macintosh computers. Teachers loved it. Students actually enjoyed physics homework. The software was spreading through schools like wildfire. Interactive physics wasn't just educational, and it was mesmerizing. Students would spend hours after class creating elaborate Rube Goldberg machines, testing what happened when you gave a ball negative mass, or seeing how many objects they could collide before the computer crashed. David noticed something peculiar. Given basic physics tools and freedom to experiment, users created things far beyond what he'd imagined. They weren't just learning Newton's laws, they were building miniature worlds. The Baszucki brothers expanded their suite with Working Model for mechanical engineers. By 1998, MSC Software came calling with a $20 million acquisition offer. For David, then 35, it meant financial freedom. But more importantly, it meant time to think about what came next. Between 2002 and 2004, freshly minted millionaire Baszucki became an angel investor in the exploding Bay Area tech scene. He put money into Friendster, the social network that would teach Silicon Valley both the power and fragility of network effects. He watched as users desperately wanted to customize their profiles, create unique identities, connect with others. He invested in other social platforms, each time noticing the same pattern. People craved tools for self-expression and connection, but the platforms kept boxing them in with rigid templates. Meanwhile, his former Knowledge Revolution colleague Eric Cassell was experimenting with 3D physics engines. The two would meet for coffee in San Mateo, sketching ideas on napkins. What if they combined physics simulation with social networking? What if, instead of profiles and wall posts, users could build 3D spaces and interact through avatars? What if the content wasn't created by the company at all, but entirely by users? In 2004, they incorporated Roblox initially called Dynablocks, a name so forgettable they changed it within a year. The vision was audacious and slightly insane. Create a platform where anyone could build 3D multiplayer experiences using simple tools. No coding required initially. Kids could be game developers. Teenagers could run virtual businesses. Everyone could play everyone else's creations. They started coding in a small office in Menlo Park. The early prototype was rough. Blocky avatars, simple physics, basic building tools. But when they let a handful of kids try it, something magical happened. Within hours, children were building obstacle courses, role-playing games, and virtual hideouts. They weren't just playing, they were creating worlds and inviting friends to explore them. On September 1st, 2006, Roblox officially launched to the public. No marketing budget, no press release, just a website where kids could create accounts and start building. David and Eric believed that if they built the right platform, the users would come. They had no idea they'd spend the next 6 years waiting for the world to notice.
If you searched for Roblox in 2008, you'd find essentially nothing. No TechCrunch articles, no mainstream press. Just a slowly growing community of kids building increasingly elaborate games on a platform that looked like Minecraft's awkward cousin. While Club Penguin was being acquired by Disney for $700 million and Facebook was opening to the public, Roblox was there, quietly, building. The philosophy was radical in its simplicity. Provide tools and servers, nothing else. No professionally designed games, no content team, no IP licensing deals. Just a physics engine, building blocks, and eventually basic scripting capabilities. David Baszucki would later call this the platform purity principle, a bet that user creativity would ultimately outperform any content they could produce themselves. In 2007, the platform introduced features that would define its DNA. The safe chat system used aggressive filtering to protect young users. So aggressive that innocent phrases were often blocked, leading to the platform's infamous hashtag language, where blocked words appeared as hash 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 hash. They added Builders Club, the first premium subscription at $5.95 monthly, giving members daily Robux stipends and the ability to sell virtual items. Character customization arrived, letting players dress their blocky avatars in user-created clothing. By 2010, something strange was happening. While the tech press obsessed over Zynga and mobile gaming, Roblox was quietly hitting 7 million monthly active users. No venture capital, no growth hacking, just word of mouth between kids at school. Have you played this game where you can build games? The platform was developing its own culture. Obbies, obstacle courses, became a genre. Tycoon games where players built businesses proliferated. Role-playing games set in everything from high schools to pirate ships emerged. Each successful game inspired dozens of variations, creating a Cambrian explosion of content. In 2011, Roblox held its first Roblox Rally, a developer conference at the company's headquarters. About 40 creators showed up, mostly teenagers and their parents. The agenda? How to better reward the people building content. This wasn't corporate speak, it was existential. Without creators, Roblox was just an empty physics sandbox. The mobile revolution nearly passed them by. When the iOS app launched in 2012, it was buggy, limited, and drained batteries like a space heater. Android would follow in 2014, Xbox One in 2015. Each platform required massive engineering effort to make user-generated content work across different hardware. But Baszucki insisted, the platform had to be everywhere kids were. Then, tragedy struck. On February 11th, 2013, co-founder Eric Cassell lost his battle with cancer. He was 45. For a company of just 68 employees, it was devastating. Eric hadn't just been the technical co-founder, he was the heart of the engineering culture, the guy who'd spend weekends helping young developers debug their games. His death could have been the end of Roblox's scrappy startup phase. Instead, it marked the beginning of its transformation into something much bigger.
3 months after Eric Castle's death, Roblox made the announcement that would transform it from a playground into an economy. The Developer Exchange Program, or DevX. Starting immediately, creators could convert their earned Robux into real US dollars. The rate: 100,000 Robux for $350. For the first time, that 14-year-old making obstacle courses could earn actual money. The timing wasn't coincidental. YouTube had proven that user-generated content could support full-time creators. Twitch was showing that audiences would pay for digital entertainment. But nobody had successfully created an economy where teenagers could build businesses inside a game platform. Roblox was about to try. The economics were deliberately challenging. To qualify for DevX, developers needed 100,000 earned Robux, not purchased, a verified email, and to be 13 or older. The exchange rate meant Roblox kept roughly 75.5% of revenue, a take rate that would make Apple's 30% look generous. But developers didn't revolt. Why? Because Roblox handled everything: servers, physics engine, multiplayer infrastructure, payment processing, content delivery, moderation. Developers just had to create. Within weeks of the DevX announcement in October 2013, teenagers were earning hundreds of dollars monthly. DevX let successful developers exchange the Robux they earned for real-world currency, with developers needing at least 100,000 Robux to cash out at $100 USD. By September 2014, less than a year after launch, Roblox had paid out over $500,000 to developers. The success stories were extraordinary. Limonas Mileska, a 17-year-old from Lithuania using the handle Lolaris, created The Mad Murderer, which garnered nearly 16 million plays in just 4 months. Two developers, Lolaris and 15-year-old Bereza, were hitting the $12,500 monthly payout limit by August 2014, prompting Roblox to raise the cap to $20,000. Meanwhile, the platform was quietly eliminating its original virtual currency. In April 2016, after 30 days' notice, Roblox discontinued tickets, the free currency players earned daily just for logging in. The move was controversial but strategic. Tix had created a complex dual currency economy that confused users and enabled exploitation through currency trading bots. With Tix gone, Robux became the sole currency, simplifying the economy and pushing users toward paid transactions. The same year, Roblox made a prescient bet on virtual reality, partnering with Oculus to launch Roblox VR for the Rift. While VR wouldn't become mainstream for years, it signaled Bazooki's vision. Roblox wasn't just a gaming platform, but a proto-metaverse where any form of digital interaction could occur. By December 2016, the company had grown from 68 to 163 employees. More importantly, they'd solved the fundamental platform problem: how to incentivize quality content creation at scale. The 75.5% take rate that seemed exploitative? Developers didn't care. They were teenagers making 5 figures from their bedrooms. The infrastructure Roblox provided, multiplayer servers, physics engine, payment processing, content delivery, would cost individual developers hundreds of thousands to replicate. The model was working, too well perhaps, because success attracts attention, and Roblox was about to enter a phase where staying small was no longer an option.
March 2017 marked the end of Roblox's bootstrapped era. Meritech Capital Partners and Index Ventures led an $82 million Series G round, the company's first significant institutional funding after 11 years of operation. The message from investors was clear: stop being a North American phenomenon. Become global. Within months, Roblox hired Chris Misner as president of Roblox International. Misner, who'd previously scaled businesses in Asia, immediately began tackling the platform's biggest growth barrier: localization. It wasn't just about translating menus. User-generated content meant millions of game descriptions, chat messages, and virtual items needed real-time translation. The engineering challenge was staggering. The international push revealed an infrastructure problem. Roblox was running on third-party cloud services that couldn't guarantee the sub-100 millisecond latency required for real-time multiplayer gaming across continents. In September 2018, they hired Dan Williams from Dropbox with a mandate: build proprietary data centers. Williams would spend the next 2 years migrating Roblox from AWS to custom infrastructure, a move that would prove critical during the pandemic surge. October 2018 brought a strategic acquisition, Packet Zoom, a mobile network optimization startup. Why did a gaming platform need network optimization? Because 72% of Roblox's daily active users were on mobile, often on spotty 3G connections in emerging markets. Packet Zoom's technology could maintain playable connections even on weak networks, essential for global expansion. The China opportunity loomed large. In May 2019, Roblox announced a joint venture with Tencent to create Luobu, a localized version compliant with Chinese regulations. The partnership required significant compromises: stricter content moderation, data localization, removal of certain social features. But China represented 600 million potential users. The compromises seemed worth it. By late 2019, Roblox supported German, French, and Chinese interfaces. Daily active users had grown from 9 million to 17.6 million in just 2 years. The platform was generating over $500 million in bookings annually. More remarkably, it was doing so while remaining virtually unknown to mainstream media and most adults. February 2020 should have been a victory lap. Andreessen Horowitz led a $150 million Series G at a $4 billion valuation. Mark Andreessen joined the board, bringing Silicon Valley credibility to what many still dismissed as a kid's game. The round valued Roblox higher than established gaming companies like Zynga or Take-Two Interactive. Then, in March 2020, the world shut down. And Roblox's trajectory went vertical in ways nobody, not even Bazooki, had anticipated.
On March 13th, 2020, schools across America began closing. Within 72 hours, Roblox's concurrent user count spiked 50%. By April, as lockdowns spread globally, daily active users had doubled. The platform wasn't just benefiting from kids having more screen time, it had become social infrastructure, the place where quarantined children maintained friendships. Virtual birthday parties exploded on the platform. Adopt Me, a pet simulation game, hit 1.6 million concurrent players in April, breaking Steam's all-time record. Teachers began using Roblox for virtual field trips. The platform that had grown steadily for 14 years was suddenly handling exponential growth, adding more users in 3 months than in the previous 3 years combined. Behind the scenes, Dan Williams' infrastructure team was performing miracles. They'd completed the migration to proprietary data centers just months before, a move that now looked prophetic. While competitors like Nintendo and Sony struggled with overwhelmed servers, Roblox maintained 99.9% uptime despite 10x normal traffic. The growth numbers were staggering. Daily active users jumped from 17.6 million in Q4 2019 to 33.4 million by Q3 2020. Hours engaged increased 124% year over year. Revenue run rate exceeded $1.8 billion. Suddenly, every investment banker in New York was calling. In October 2020, Roblox filed for a traditional IPO, seeking to raise $1 billion at an estimated $8 billion valuation. The S1 filing revealed fascinating details. The average daily active user spent 2.6 hours on the platform. 54% of users were under 13. The company had paid developers $250 million in 2020 alone. But the December IPO window turned chaotic. Airbnb and DoorDash both doubled on their first trading day, suggesting massive underpricing. Roblox's bankers at Goldman Sachs worried about leaving billions on the table. In an unprecedented move, Roblox delayed its IPO weeks before the planned date. January 2021 brought 2 surprises. First, the SEC raised concerns about how Roblox recognized revenue from Robux sales, questioning whether virtual currency should be booked immediately or over time as players spent it. Second, Dragoneer and Altimeter led a $520 million Series H at a $29.5 billion valuation, nearly 4x the October estimate. The valuation leap wasn't just pandemic froth. Roblox had become a cultural phenomenon. Lil Nas X had performed a virtual concert on the platform. Gucci was selling virtual handbags. The Metaverse concept that Bazooki had been pitching for years suddenly seemed prescient, especially as Facebook prepared its own pivot to Meta. Roblox abandoned the traditional IPO for a direct listing, No new shares, no roadshow, no lockup period. Just let the market decide the price. On March 10th, 2021 at 1:30 p.m. Eastern, Roblox began trading. The NYSE reference price was $45. The first trade printed at $64.50. By close, Roblox was worth $45.3 billion. More than Electronic Arts, more than Take-Two, more than any gaming company that had ever gone public. David Baszucki, still wearing his signature glasses and casual attire, rang the opening bell virtually from Roblox headquarters. His stake was worth $4.6 billion. Wall Street was valuing Roblox not as a gaming company, but as a platform, a metaverse, a new form of social network. The question was whether this valuation was visionary or delusional. The answer would depend on whether Roblox could maintain its pandemic gains while evolving beyond its core audience of children.
To understand why Roblox commands tech platform valuations despite being just a gaming company, you need to grasp its economic machinery. A three-sided marketplace wrapped in a virtual economy, powered by network effects that would make even Facebook envious. Start with the basic transaction flow. Parents buy Robux for their kids, typically $10.20 monthly. Kids spend Robux on in-game items, access to premium games, or avatar accessories. Developers earn Robux from these transactions. Roblox takes a cut at every step, then allows developers to cash out through DevEx at intentionally unfavorable rates. The genius lies in the details. When a player buys 800 Robux for $9.99, Roblox immediately recognizes some revenue, but holds the rest as deferred revenue until the Robux is spent. This creates a massive float. At any moment, billions of unspent Robux sit in user accounts, essentially an interest-free loan to Roblox. The platform's take rate is staggering. The current DevEx exchange rate is $0.0035 per Robux, while players buy Robux at roughly $0.0125 each. This 72% spread isn't exploitation. It's the cost of infrastructure. Roblox handles payment processing, including chargebacks from parents discovering unexpected charges, content delivery across 180 countries, moderation of millions of assets, and multiplayer server costs that would bankrupt independent developers. The numbers tell the story. In 2023, Roblox Corp paid out a record $740.8 million to game creators, an increase of roughly 19% from the $623.9 million the year before. But here's the crucial detail. 12,000 developers exchanged Robux for real-world currency in 2023. About 3,500 of those devs earned at least $10,000. Approximately 750 of them crossed the $100,000 mark, and a lucky 100 became millionaires thanks to their Roblox creations. This creates a brutal power law distribution. The top 1% of developers capture the vast majority of earnings, while millions create content for free hoping to break through. It's YouTube's creator economy on steroids, with one key difference. The creators are often teenagers who view any earnings as miraculous rather than exploitative. The platform's monetization has evolved beyond simple item sales. Premium subscriptions at $4.99 to $19.99 monthly provide Robux stipends and exclusive features. In-game advertising allows developers to promote their games to players of similar titles. Roblox takes 30% of these ad revenues while providing targeting algorithms that would be impossible for individual developers to build. In 2024, Roblox introduced a new paid access model where developers can charge upfront for games, keeping 50 to 70% of revenue depending on price point, significantly better than the DevEx rate. This shift acknowledges that as developers professionalize, they need economics that can support studios, not just bedroom coders. The virtual economy creates fascinating second-order effects. Limited edition items appreciate in value, creating a gray market of traders who flip virtual hats like sneakers. Groups of developers form studios, pooling Robux to fund larger projects. Some players become Robux millionaires purely through trading, never cashing out through DevEx, yet the model has vulnerabilities. Parents remain confused about Robux pricing, leading to regular, "my kid spent $500" horror stories. The platform's dependence on child users creates regulatory risk. Any law restricting monetization of minors could devastate the business model. And the 75% platform take rate, while accepted today, looks increasingly anachronistic as creators gain bargaining power. Still, the economics work because Roblox solved the fundamental platform equation. Make it easy enough that millions will create for free, valuable enough that thousands can earn meaningful money, and viral enough that the content markets itself. It's a formula that's generated billions in revenue while remaining stubbornly unprofitable. A paradox that defines modern platform economics.
August 2021 should have been a victory lap. Fresh off their record-breaking direct listing, Roblox announced two strategic acquisitions: Gilded, a communication platform for gaming communities, for $90 million, and Bash Video, a social video startup. The message was clear. Roblox wasn't content being just a gaming platform. It wanted to own the entire social graph around gaming. David Baszucki began evangelizing his 8 characteristics of the metaverse: identity, friends, immersive experiences, low friction, variety, anywhere access, economy, and safety. While Meta was burning $13 billion annually on VR hardware, Roblox was building the metaverse with blocky avatars and user-generated content. The contrast was stark: Meta's top-down, professionally designed worlds versus Roblox's bottom-up chaos of creativity. Then came the China implosion. Luobu, the joint venture with Tencent launched with fanfare in 2019, shut down in January 2022. Leaked documents revealed the brutal reality. Chinese regulators demanded extensive censorship, including blocking any content referencing Taiwan, Tibet, or Tiananmen Square. Tencent, supposedly a partner, was simultaneously developing competing platforms. After burning millions on localization and infrastructure, Roblox retreated, marking its first major strategic failure. The safety challenges multiplied with scale. By 2024, Roblox employed over 1,600 people working on content moderation and safety, more than most gaming companies' entire staff. They introduced Roblox Sentinel, an AI system that scanned billions of messages and millions of uploaded assets daily. Yet problems persisted. Predators found ways to groom children despite chat filters. Extremist groups created recruitment games disguised as innocent role-playing experiences. The August 2025 controversy crystallized years of tension around platform safety. Roblox Corp reportedly issued a cease and desist order to Schlepp, close the accounts related to his stings, and threatened to sue him for breaching Roblox's TEUE and violating the Computer Fraud and Abuse Act. Schlepp, a 22-year-old YouTuber who'd been conducting sting operations against alleged predators, had led to the arrest of 6 predators within the Roblox community over the past year. While seemingly well-intentioned, the vigilantes Roblox banned had taken actions that created an unsafe environment for users. Similar to actual predators, they often impersonated minors, actively approached other users, then tried to lead them to other platforms to have sexually explicit conversations. The company argued that vigilante groups were holding their reports to Roblox until after they had coordinated real-life meetups and built their own social media posts, meaning alleged bad actors could potentially remain on the platform longer. The backlash was swift and brutal. Congressman Ro Khanna created a petition with a goal of 1 million signatures that urged Roblox to do more to protect children. The Attorney General of Louisiana, Liz Murrill, sued Roblox Corporation in relation to the incident. American television journalist Chris Hansen, known for To Catch a Predator, said he was producing a documentary film about the state of child safety on the Roblox platform. Meanwhile, Baszucki pushed forward with his metaverse vision. The company set ambitious targets: 1 billion daily active users and routing 10% of all gaming revenue to creators. These weren't incremental goals. They required Roblox to become something beyond a gaming platform, to become digital infrastructure for human interaction. The Shopify integration announced in 2024 exemplified this ambition. Creators could now sell physical merchandise directly through their Roblox experiences, with Shopify handling fulfillment. A kid playing a racing game could buy a real t-shirt featuring their favorite virtual car delivered to their door. The boundary between digital and physical commerce was dissolving. Yet for every innovation, a new challenge emerged. International expansion stalled after the China failure. Attempts to age up the platform struggled against its kid-focused reputation. The company remained unprofitable despite billions in revenue, burning cash on infrastructure and safety measures that investors increasingly questioned. By late 2025, Roblox found itself at a crossroads. It had built the metaverse before Meta made it trendy, created a creator economy before creator economy was a term, and pioneered user-generated content at unprecedented scale. But whether this foundation could support Bazooki's trillion-dollar vision remained the question that would define Roblox's next chapter.
If you wanted to build the next Roblox, where would you start? Not with better graphics or more sophisticated tools. Those are table stakes. The genius of Roblox lies in understanding that platforms aren't built. They're grown through carefully orchestrated network effects that compound over decades. Consider the fundamental insight. Roblox has 2.8 million active developers creating content, but only about 12,000 cash out through DevEx annually. This means 99.6% of creators work for free, motivated by passion, learning, or the lottery ticket hope of viral success. This isn't exploitation. It's the same dynamic that powers YouTube, TikTok, and every successful UGC platform. The key is making creation so accessible that the joy of building outweighs the lack of immediate monetary reward. The platform's moat isn't technology. Unity and Unreal Engine are technically superior. The moat is cultural. When a 10-year-old wants to make a game, they don't download Unity. They open Roblox Studio. When that same kid wants to play with friends, they don't boot up Fortnite. They browse Roblox experiences. This reflexive behavior, ingrained in childhood, creates switching costs that no amount of marketing can overcome. The virality mechanics are elegantly simple. Every game on Roblox is inherently multiplayer and social. When a kid finds a fun game, they immediately invite friends. Those friends need Roblox accounts. Once they have accounts, they discover other games. Each game becomes a customer acquisition channel for the platform itself. It's viral loops all the way down. The economic model teaches harsh but important lessons about platform governance. That 75.5% take rate that seems exploitative, it's actually a filter. Only developers creating genuine value can overcome that hurdle to profitability. This natural selection process ensures quality content rises while spam and low-effort copies fail. YouTube learned this lesson the hard way, constantly tweaking algorithms to surface quality. Roblox built it into the economics from day one. Content moderation at scale requires accepting uncomfortable truths. With millions of assets uploaded daily, perfect safety is impossible. Roblox's approach, aggressive automated filtering plus human review plus community reporting, catches most bad content but creates false positives and missed negatives. The alternative is pre-screening everything, which would kill the platform's creative velocity. Every platform must choose between safety and openness. Roblox chose a middle path that satisfies neither extreme but works in practice. The platform's approach to developer relations offers a masterclass in ecosystem management. Rather than picking winners through featuring or exclusive deals, Roblox lets metrics determine success. Games that retain players and generate revenue naturally get more visibility through the recommendation algorithm. This meritocracy, while brutal, ensures developers focus on player satisfaction rather than platform politics. The age demographic lock in Roblox happened by accident but provides a blueprint for platform builders. By being uncool to anyone over 16, Roblox created a space where kids could interact without adult oversight or judgment. This same dynamic powered Snapchat, TikTok, and every successful youth platform. The lesson? Sometimes excluding audiences is more powerful than including them. The virtual economy design, with Robux as the sole currency and DevEx as the only official cash-out method, creates crucial platform control. Roblox can adjust exchange rates, implement holds, and prevent money laundering because every transaction flows through their systems. Contrast this with blockchain-based games where the platform loses control of the economy to external exchanges. Perhaps most importantly, Roblox proves that platforms can be built without venture capital growth hacking. For its first decade, Roblox grew organically through word of mouth. No growth team, no viral mechanics, just a product that kids loved enough to evangelize. In an era of growth at all costs, Roblox's patient cultivation of community feels almost quaint. Yet it built more durable network effects than most unicorns achieve with billions in marketing spend. The playbook distilled: make creation accessible to children. Let them build for each other. Take a large enough cut to fund infrastructure, but not so large that professionals can't profit. Moderate aggressively, but accept imperfection. Never compromise the meritocracy. And, most crucially, be patient. Platform network effects take years to compound, but become nearly unassailable once they do.
Let's cut through the noise. At current valuations, you're either betting Roblox becomes the Western equivalent of Tencent, a digital utility that an entire generation can't live without, or you're looking at the next Club Penguin, a kids platform that ages out of relevance as its users grow up. The bull case: infrastructure for digital natives. The bulls see something most analysts miss. Roblox isn't competing with Epic or Unity. It's competing with YouTube, TikTok, and Instagram for share of digital attention. Roblox had 111.8 million daily active users in the second quarter of 2025, 36% of whom were users under 13. These aren't just players. They're creators, socializers, and increasingly young entrepreneurs. The financial trajectory supports optimism. Total shareholder returns of 187.18% over the past year and year-to-date gains of 103%. As of 2025 suggest institutional investors are believers. The platform economics are compelling. Essentially zero marginal cost for new users, negative working capital from the Robux float, and a take rate that would make payment processors weep with envy. The demographic lock-in is perhaps the strongest bull argument. Kids who grew up on Roblox don't leave. They graduate to more sophisticated experiences within the platform. The 13-17 age cohort is growing faster than under 13s, suggesting the platform is successfully aging up with its users. These aren't casual users either. Average daily engagement exceeds 2.5 hours, higher than Netflix or YouTube. The creator economy moat deepens daily. With nearly 100 games each generating over $1 million in 2023, Roblox has proven that teenagers can build real businesses on the platform. As these creators professionalize, forming studios, hiring employees, raising capital, they become increasingly locked into Roblox's ecosystem. Switching platforms would mean abandoning years of accumulated expertise and audience. International expansion remains nascent. While the China experiment failed, markets like Brazil, Mexico, and India show explosive growth. These countries have young populations, increasing smartphone penetration, and limited alternatives for user-generated content. Roblox could replicate its North American dominance globally. The Metaverse optionality is free at current valuations. If virtual worlds become primary social spaces for concerts, shopping, education, work, Roblox has the infrastructure, user base, and cultural cachet to capture disproportionate value. They don't need to build the metaverse, their users will build it for them. The bear case: Peter Pan platform in perpetual peril. The bears see a fundamental problem. Kids grow up, and when they do, they leave Roblox. Despite years of trying, the platform can't shake its reputation as that blocky kids game. The over 17 demographic remains stubbornly small, suggesting a hard ceiling on growth. The profitability picture is damning. Despite generating billions in bookings, Roblox lost $253 million in 2020 and continues burning cash. The bear math is simple. If you can't make money with 100 plus million engaged users, when exactly does profitability arrive? The infrastructure costs scale with users, the safety costs scale with content, and the developer payments scale with revenue. Where's the leverage? Regulatory risk looms large. A Bloomberg investigation found police in the United States had arrested at least 24 users accused of exploiting minors through Roblox since 2018. Any serious child safety incident could trigger regulatory crackdowns. Europe's Digital Services Act and similar legislation could mandate age verification, content pre-screening, or other measures that would fundamentally break the platform's economics. Competition is intensifying from unexpected angles. Epic's Fortnite creative offers better graphics and Unreal Engine's power. Minecraft remains dominant in the builder segment. New platforms like Core are targeting Roblox's demographic with superior technology. Meanwhile, AI tools are democratizing game creation, potentially obsoleting Roblox's simplified development environment. The creator economics are unsustainable. The 75.5% platform take rate only works while creators have no alternatives. As successful developers professionalize, they'll demand better terms or leave for platforms offering them. The precedent is clear. When YouTube creators got big enough, they launched their own platforms. The same exodus could happen to Roblox. The innovation pace has slowed. Roblox's core platform looks remarkably similar to 5 years ago. While they've added features, there's been no breakthrough innovation comparable to the original physics sandbox or DevX program. In technology, standing still is moving backward. The verdict. The bull-bear debate ultimately hinges on one question. Is Roblox a transitional platform that kids age out of? Or is it becoming permanent digital infrastructure for a generation that will never fully grow up? The answer likely lies somewhere between. Roblox has built something unprecedented, a user-generated metaverse with real network effects and economic value. But it faces structural challenges around profitability, safety, and demographic expansion that may prove insurmountable. For investors, Roblox represents a fascinating asymmetric bet. If they're right about the metaverse, if they can age up successfully, if international expansion works, the upside is 10x from here. But if any of these fails, you're looking at a platform that peaked during the pandemic and slowly bleeds users to whatever the next generation decides is cool. The smart money might be waiting for clarity on profitability. Once Roblox proves it can generate free cash flow at scale, the risk-reward improves dramatically. Until then, you're betting on vision over fundamentals. Historically a dangerous game in the brutal world of consumer platforms.
Standing at Roblox headquarters in San Mateo today, you'd see something remarkable. A company simultaneously at its peak and facing existential questions. The platform that started as a physics experiment has become a digital nation-state with its own economy, culture, and governance challenges. The question isn't whether Roblox succeeded, it obviously did. The question is whether past success predicts future dominance or decline. If we were running Roblox, the playbook would be ruthlessly focused on 3 priorities. First, fix the unit economics. The current model of perpetual losses despite massive scale isn't sustainable. We'd implement dynamic pricing for DevX based on developer tier and game quality. Top developers earning millions should get better rates, maybe 50% instead of 25%. Bottom-tier developers stay at current rates. This creates aspiration while improving margins on the vast majority of transactions. Second, abandon the age-up fantasy. Roblox is a kids platform. Own it. Instead of trying to attract 25-year-olds, focus on becoming indispensable infrastructure for the 8-16 demographic globally. Build parental controls so robust that Roblox becomes the only platform parents trust. Create educational experiences that schools adopt. Become so embedded in childhood that leaving feels impossible. Third, verticalize aggressively. Roblox should acquire Unity or build its own professional-grade engine. They should create their own payment processing to capture that 3% currently going to Stripe. They should build their own cloud infrastructure beyond the current proprietary data centers. Every dollar that leaves the ecosystem is a dollar that could fund better creator tools or safety systems. The biggest surprise from researching Roblox's history? How accidentally everything happened. Bazuki didn't set out to build a metaverse or creator economy. He wanted to make physics fun for kids. DevX wasn't planned. It was a desperate attempt to incentivize content creation. The demographic lock-in wasn't strategy. It was serendipity. This accidental success contains a profound lesson. The best platforms emerge from solving real problems, not from chasing buzzwords. Roblox succeeded because it gave kids something they desperately wanted but couldn't articulate: the power to create worlds and share them with friends. Everything else, the economics, the metaverse positioning, the billions in revenue, followed from that simple insight. Recent developments suggest Roblox understands its challenges. The Roblox Sentinel AI safety tool represents serious investment in platform trust. The Learning Hub positions Roblox as educational infrastructure, not just entertainment. The Shopify partnership hints at commerce ambitions beyond virtual goods. Yet questions remain. Can a platform built on childhood creativity sustain a public company's growth demands? Can safety and scale coexist when bad actors have infinite incentive to exploit children? Can Roblox maintain its cultural relevance as new platforms emerge with better graphics, AI integration, or novel mechanics? The answer may not matter for the generation already on Roblox. For them, it's not a platform or investment thesis. It's where they grew up, where they learned to code, made friends, built businesses, and expressed creativity. That emotional connection, multiplied by 100 million users, might be the only moat that matters. Roblox's ultimate legacy won't be its stock price or revenue multiples. It will be proving that, given simple tools and freedom, children can build worlds that rival anything professionals create. That insight, that creativity is universal if you remove the barriers, might be worth more than any financial return. The story of Roblox is still being written, not in boardrooms or earnings calls, but in millions of bedrooms where kids open laptops and ask themselves, what should I build today? As long as that question excites them, Roblox has a future. The moment it doesn't, no amount of strategic planning or platform innovation will save it. For investors, creators, and platforms builders watching Roblox's journey, perhaps that's the ultimate lesson. In the attention economy, engagement isn't just a metric. It's the only metric that matters. Everything else is just keeping score. This podcast is brought to you by Empor.top, the stories of top companies. Disclaimer: this AI-generated content is for informational purposes only and should not be considered as investment advice.